still constantly trying to find that thing that is going to make them the most consistently profitable, the most money, going to fulfill most of their hopes and dreams and desires. So the expectation is that they have to do those things that they think they have to do to become successful. For example, um, placing and winning multiple trades a day that amount to um, 20, 30, 50 ticks each per day. Now, the interesting thing with that is that we come into trading, most of us, um, doing it the right way, in that knowing that until we learn, we have to keep our contracts down small and be single contract or just very small lot traders. And the interesting thing is that nobody ever told us that trading that way, you will never be successful trading on a longer time frame, a longer time period. I say never. That's I don't ever want to say never. It is highly unlikely. There are always those people that are the exception to the rule. But I think most of you realize that I'm talking to you because I've done this for a long time. I've talked to a lot of people. I know that we all share a lot of very similar experiences. If you weren't one of those, then man, are you lucky? And I hope you're here just because for the entertainment value. Um, but other than that, we have found a system we have kind of, I want to say stumbled on. It wasn't stumbled on. If you were with us on Tuesday, you realize how I kind of came up with this whole idea of these very short-term trades and some of the benefits of being in these short-term trades, of being a specialist type trader. So now we're going to talk to you today about why it works, what's actually happening, and how to do it, and how to do it relatively quickly. Okay, and turn yourself into, instead of looking to be a losing trader into being a highly successful trader, how about just setting your sights on not being a losing trader and tasting what consistent success tastes like, and then build on that. Okay, so that's kind of what we're going to be doing today. That's an overview. Now, I had to kind of start thinking outside of the box to come up with this. Right? Oh, let me back up just a minute. We're gonna move forward. We still have. It's really interesting. It's right when 4:30 hits. About 3/4 of the people come piling in all at once. I wanted to give away like a new card to the people that were here at the beginning. Give away something good so that the people that came in late missed out. Unfortunately, I don't have a new card to give. Anyway, um, the yeah, that's this. This meeting doesn't have the the attendee list enabled. We can see it in the background, but we try to keep people from getting distracted playing with the attendee list. Couple of things. I'm in Atlanta, Georgia. The sky just turned black, and the wind just kicked up, and the bottom just fell out of a storm. So hopefully we won't lose a connection here. But if we do, don't leave. I will. I have a backup internet provider, and so all I have to do is switch over to that. So if I lose connection, don't worry. I'll be right back. Just hang out with us, okay? Um, it won't close the room or anything. It'll just shut me off and it'll shut the projection off, but the room will stay open. Okay, so there's that. Number two, I've got a presentation that I want to make sure I get through and stay focused and not get off topic. As you may have noticed on Tuesday, there are people that can tend to hijack a webinar because they believe what they have to say is much more important than what I have to say, and they'll start typing in and cause disruption. Um, Connor and Lisa will handle that. But if I start reading, I can get very distracted and want to make sure I don't get distracted. So I just keep going with the presentation. So I cover the chat. Okay, I'm going to keep the chat covered. If anybody needs to reach me, um, they can reach me in the background through this other chat device that we use. So I'm going to cover up the chat now. If you have any questions, feel free to ask. Connor and Lisa and Praveen can answer almost all of your questions for you. If it's something specific for me, then hold it until the end, and I've set aside some time at the end to answer questions. Okay. All right. So I'm going to cover up the chat, and I can no longer see the chat. So this whole bunt idea was me thinking outside the box. Was me saying, look, I don't have the tools necessary to be competitive with a lot of things that are going on in the markets. You know, there are the people that have been trading a long time. There are the people that have been uh, able to trade larger amounts of contracts, more money, more everything. I just, and maybe had the ability to trade like a machine, had the ability to manage their emotions. I had none of that. And I came to that realization after many years of struggling with my trading, and I decided to stop and be kind of introspective a little bit and say, what is it that I'm good at, and what am I not good at? One of the things I was good at was problem solving, but I never approached trading as problem solving. I always approached it as something I needed to learn from all of these other people out in the internet world. Never really thought outside the box and said, you have a problem. How are you going to solve this problem? As soon as I did that, it opened up a whole world of opportunities. How many of you have seen the movie Moneyball or know the Moneyball story? It's actually fascinating. It is a very interesting story about the Oakland A's back in the, 1980s, I guess, 90s maybe? I don't remember. They didn't have a big budget for all of the big time players that like the Yankees had. And so they felt like they couldn't compete if they didn't think outside the box. So they threw away the conventional wisdoms of baseball, because it's often subjective and very often flawed. And what they decided to do is start looking for undervalued baseball players using a different metric for assigning value to something. This is exactly what I did. And in fact, they end up calling it sabermetrics, for those of you that know the story. They applied this sabermetrics and ended up being an extremely competitive team. For those of you that know the story better than I do, I think they ended up going to the World Series, or at least got very close to being in the World Series the very first year. So they were able to find a way, rather than using conventional wisdom, saying, nope, it's been this way forever. This is the best way. We're going to, you have to do it the way everybody else is doing it. And that is by using the same measurements or the same metrics for creating a baseball team. All right. So if you don't know it, read the book or watch the movie. It's actually very fascinating. And so you guys have already read all of this on the screen here. But how often are conventional wisdoms wrong? I mean, a lot, right? They just start to kind of grow a life of their own, And, it wasn't that long ago people thought the earth was flat, and that was the conventional wisdom. And, we know that's completely wrong now. Opportunity is not always where you think it is. I identified opportunities by identifying my shortcomings and saying, okay, I have a problem. If I have these shortcomings, what would I be good at? And where can I find that? Okay. So and this is the lessons of Moneyball. You can do more with less if you just choose to allow yourself to think outside the box. So I tell people to do this all the time. Unfortunately, I think a lot of people are just like, yeah, whatever. But when I can relate it to something that everybody knows about, and or is has been written about or made a movie about, and then people can understand, hey, maybe there is something to this whole thinking outside the box thing. Sometimes we're paying attention to the wrong things. Sometimes we're actually trying to accomplish the wrong things. For example, one of the metrics, the conventional wisdom metrics for um, drafting a hitter, somebody who they needed to be a hitter, was like, what is his home run record? Well, those are the big money guys, and they'd spend tons of money on guys that could hit home runs, leaving a whole bunch of other players available at a bargain basement price who were really good at getting the bat on the ball and getting it out there and getting on base. But nobody really cared about that because it wasn't fancy. It didn't draw a lot of attention. And so that metric got ignored. So in bunt trading, we're absolutely doing the opposite. We are not ignoring those metrics. We are looking at things that happen regularly that we can take advantage of and create something really special. And we've created essentially a team just like those Oakland A's, but we call it bunt trading. Okay. Now, when you think about it, what was your goal or motivating factor to get into trading? Most of you are going to say to make a lot of money, to make a living, to quit my job, to have more free time, to, you know, enjoy traveling and whatnot. But we all tend to focus on money. Money is what those things get. The financial independence is what those things get. We tend to forget everything else and focus on how much money we can make at trading. This focus can create a whole lot of worry for us. Okay? It becomes your sole thought when you sit down to trade. I hope a lot of you were here on Tuesday because you'll know exactly what I'm talking about. We all use money as a metric for success. At least those of us that have struggled for a long time. Maybe money is the wrong metric to use for success. Just maybe. And you allow yourself to think outside the box for a little while. Kind of do some sabermetrics here. And let's allow ourselves to think, okay, if not money, then what? Okay? So for me, if you think about it, trading is about money and golf is about golf, right? This is what we typically think about. But it's easy to forget what really matters, right? You want to be a great golfer to get that big paycheck, right? You want to get good at golf because you want to get that big paycheck. But it's really easy to forget what matters, right? What matters is the work that you put in to get to that point. It's not about knowing how to golf to get to that point of it being of calling yourself successful. It's the process of getting to that point that matters. That's where the value is. All right? It's easy to forget what matters. Okay? We tend to think more about money and less about consistency. We're looking for, most of us come into trading and we're looking for these home runs, right? We want to walk away from a trading day having just made $1,200, and we want to do it every day. And that's our goal. And so what happens is you start having these wild swings that you could imagine if you're swinging at a baseball, how many wild swings it's going to take before you actually connect with the ball and send it over the fence. You're going to strike out so many times trying to connect with that ball. And really what you want to do, using the sabermetrics example, is just connect. Get the bat on the ball consistently, and that'll put you ahead of so many other traders, okay? So consistency and success are very tightly related, okay? So you absolutely cannot be a successful trader without developing consistency. If you have three 1,200 winning days in a row, $1,200 winning days in a row, and one $5,000 losing day, you know, it doesn't take long to knock you back on your heels and lose everything that you work towards. And you know, if you're looking for these wild home run hits, all right? So bunt trading, this is what we do. We do one very small, very simple thing, okay? We work at becoming the best in the world at this one very small, very simple thing. And then we do it over and over and over. Now, most of us have learned to become consistently inconsistent, all right? But, you know, that most traders feel they can win sometimes, but they've not really developed any consistency. Yet they're still using money as a metric for success, right? Money is the thing that makes me stupid. So why am I using that as a metric for success? So I started thinking, what if I could just win 2 ticks a day? Consistently, 2 ticks. No more trying to hit the ball out of the park. No more trying to ride a trend, 50 ticks. No more trying to manage my emotions. No more nothing. What if I could pick up something in the markets, and if I could find one place where a confluence of events occurred, and I could get just 2 ticks? How many of you think that you could find, or you know, or you've watched the charts enough, you've been involved enough, you feel fairly confident that you know when certain things happen, you can get 2 ticks? Now, nothing's guaranteed, right? I know this. This was an exercise that I went through. So I did this exercise. I said, okay, I want to get 2 ticks a day. And now I'm going to start marking down how often I could end a day as a winning trader. I don't care, you know, it really doesn't matter. 2 ticks, I got 2 ticks, so 1 to cover commissions and then 1 tick. So you end the day maybe with 10 bucks. Record how many days in a row you can do that. Start building a foundation of consistency. Once you have the foundation of consistency, you can prove to yourself that you can be a winning trader. All right? All right, so now what? So you're developing this consistency on your way to being a successful trader. Now what? We talked about this a little bit on Tuesday. Remember, do one small thing, do it better than anybody, do it over and over and over again. Notice that if you do that one small thing, and let's say that's 3 ticks, you work your way up to 3 ticks, and you've gotten really good at it, and you're trading 5 lots. You end up every time you do that, you got 126 bucks after fees. What if you change that to 4 ticks or 5 ticks, and you trade it 2 or 3 times a session? 500, 750? Because you're just doing the same thing over and over and over again, and you're getting so good at it. You're getting such a feel for what's going on in the markets because of the indicators are telling you that you have a confluence of events, that there are multiple sources of data in the markets that suggest something is about to happen. And that's what we trade. We do one very small thing, we become the best of the world at it, and we do it over and over and over again. All right, so how did I come up with this? Remember I told you one of my strengths is as a problem solver. I was in the construction business for a long time, and I had people calling me out to do projects because I was really good at solving whatever problem they had. And not only whatever problem they thought they had, but I would solve other problems they didn't even know they had. So I was really, really good. I was good at my job as a contractor and finishing good projects. But one of the reasons I was so good is because problem solving is one of my strengths. So I decided, okay, I'm gonna wipe away everything I know, and trust me, that is so hard. I know many of you are out there trying to trade a trading system, and you've tried somebody else's system, and you've tried this, and you've tried that, and you've put these trading systems together, and you've added certain things, and now you're basically developing your own trading system, and you've got it to the point where it's almost there, but not quite there, and you've got all this stuff, and all you need, and you may be here saying, I know maybe this guy has that one thing I need to add to my trading system because I'm almost there. Unfortunately, in my experience, unfortunately, I hate to tell you this, but you're not. You're not almost there. I always thought I was almost there. I couldn't trust anybody else because everybody else took my money, and all the advice I was getting was crappy because I wasn't any better of a trader after 7 years than I was when I first started. So I decided instead I'm going to look at this chart, and I'm going to, with very reluctantly, because man, did I have a lot of stuff. Man, did I have a lot of things I was trying to do, and I'd been working at it years, and it just wasn't working out. So it was hard to get rid of and start looking at a blank chart and say, okay, I have a problem. I'm going to get rid of everything I know, and I'm going to look at these charts, and I'm going to try to solve this problem. Now, what do I see on this chart? And I looked at that, look at it, and then go, and it wasn't this chart. I mean, it could have been any chart, but this is a good example. So I look at the chart, and I'm like, okay, for some reason, price stops, and it just stops dead in its tracks and changes direction. Well, that's something obvious. that's something that I should try to study. What's going on in the markets just before and right at when price stops and turns? So that's what I did. I started seeing, okay, there are lots of opportunities where price for no particular reason stops and turns. What are some similarities in the market every time that happens? That was my problem solving um, um, flow of thinking. Okay. So you can probably, now that I've told you that, you can probably look at this chart and see things that are common at every point, at every turn, now that you know what to look for. So that's exactly what I did, and ultimately came up with some indicators that tell us when certain things are happening in the markets. They don't tell us to take trades. They simply give us this information that certain things are happening. So let me give you a quick clue, a quick little dumbed down lesson on what's going on in the markets every single day. How the market makers are manipulating the markets and they're manipulating us. This is a way. This isn't the way. And this is oversimplified for the sake of illustration, hoping that you can understand what's going on a bigger scale. Okay? So we've got this area of what we call accumulation where it looks like nothing's going on, right? It looks like price is just drifting sideways and we're getting bored and we're getting, we're starting to watch YouTube and we're waiting for something to happen. And nothing really happened. Whatever it is. And they're going to buy up as much of it as they can. But they know everybody's watching them, right? So that, and watching and seeing, uh-oh, did my mic go out? Hold on just a second. Can everybody hear me now? Okay, yeah, it may have something to do with that weather. I will let it catch up. Everything okay? So everybody can hear me okay now. Can you see me as the cursor going in circles? Can you see the cursor? Okay. So that means it's all caught up. Yeah, I'm sorry about that. We have some serious storms going on right now, so maybe that might be it. So Connor hit me up in the background. I didn't see that you guys were had said anything, but they will keep me posted, and I'm going to press on. Okay, so we've got this area of accumulation where the big boys are actually buying very small, very low volume. They want to keep it quiet because they don't want everybody to know what they're doing. Then they're going to clamp down on. They're going to buy most of the available assets that are out there. So they now own the largest share simply in this accumulation phase. They're going to clamp down and stop selling it. And what happens when they stop selling it? When buying and selling stops, price starts going up. So they do that, and then they will offload some and allow this to back up a little bit, and then they start acquiring maybe more at this price. Then they clamp down, price goes up a little bit. Now they're in an area of distribution. And it looks very much exactly like the same as accumulation. And right here is where they make their profits, okay? They're going to offload enough of the contracts or the assets that they bought down here They're going to offload them up here for a profit. And they're going to only offload a certain amount at this price because they're still going to manipulate the markets a little bit. This is where all their profit is made, but they're not done manipulating yet. They're going to clamp down on price. They're not going to sell anymore. Supply and demand dictates that price will shoot up. And then all of a sudden, they're going to dump every one of, they still have a majority share of all the assets, right? So that they can manipulate what's going on. They suddenly dump all of their assets on the market. Suddenly, first we had no supply, lots of demand, and all of a sudden, bam, they overwhelm it with supply, and suddenly the price starts tanking. And then they do it again and again and again. Look at any chart and you will see this. Not as clearly defined maybe, but you look at it on a tick chart, on a minute chart, a 5-minute, 10-minute, doesn't matter. You're going to see this same thing because they're constantly manipulating the markets. And unless you're one of them, you can get caught up in this. So what am I looking for? Well, I'm looking for when this happens. I'm looking for the pullbacks. I'm looking for after this push or these up thrusts, this little bit of a pullback right here. And then there'll be another push, and I'm looking for a little bit of pullback. And then sometimes these are push on the way up, and then sometimes it's this climax bar with a major up thrust that starts a complete reversal. Okay? So that's what I was looking for. That's part of the information I was looking for. So I decided I needed to know what was going on in these bars. Not just the fact that they're being manipulated, but what else is going on. If I read everything that's going on in this bar, then the next time I see a bar doing that, I can anticipate that that bar is likely manipulated by the big boys who are trying to cause a reaction. Does that make sense? It seems very, very logical now. It seems very logical now. And the nice thing about these little things, most people ignore them completely. Most people have no idea that that's probably the best opportunity because of the conventional wisdoms of trading, just like in baseball. You and I don't necessarily have the ability to do this, right? So we have to take what we have and get good at this in order to be able to compete. Right? Do one very small, simple thing, become the best at the world at it, do it over and over and over again. Sabermetrics, bunt metrics. This is so simple right here. See this? This is a speed tick. This is telling us when it is highly unlikely that retail traders are able to create an upthrust bar like this. It must be manipulated. That's a speed tick. This is our divergence indicator, our flash. This tells us that even though we're setting new higher highs and the trend is going this way, momentum has already shifted directions. Interesting fact about that, price will almost always follow momentum. I'm throwing a lot at you guys here. So price has been manipulated. Orders are too fast to be retail traders. These manipulations are not random. You think they're random? They are not random. They are calculated. They're done to create a reaction. Divergence sets in, momentum and price are no longer in sync. Price will follow momentum. You'd be amazed how often this happens and how predictable it is when you can see it happen. So we're looking for strong momentum. Why do we want strong momentum? Because momentum in the markets can only be sustained for a short period of time before profit takers start jumping in and saying, okay, price has moved up this far, I'm going to take some profits. Okay? So momentum cannot be sustained. So if we see strong momentum, we know exhaustion is imminent. And this strong momentum and this exhaustion, we're looking for the information that suggests price isn't just moving on retail traders, it's moving because of manipulation. If it's moving because it was manipulated, it was done for a reason, and then we can take advantage of the reaction of other people. Okay? Then divergence sets in, wham, we got a pullback trade or a bunt trade. So we've got very specific trade setups. We've got very specific edge, a definitive edge that we exploit in the trade room. We've been doing it for, gosh, 7 years now. Most traders ignore these small things because they don't believe that conventional wisdom says that it's not important. Okay, bunt metrics, sabermetrics. Conventional wisdom say those aren't important. Every trend has pullbacks and retracements inside of it. Every trend. Now, here's the beauty. Where's the safest place for you to be when it's trading? Where's the safest place for your money to be? Not in the markets is the answer. You want to get in. You want to take advantage of what's going on. You want to exploit your edge. And you want to get out as quickly as you can. Why? Because the markets are manipulated, right? Do you know when that's going to happen? Not likely. But if you know that right after a push like that, right after a manipulation, it's very likely to get quiet for a short period of time. Things are going to pull back a little bit. The market makers are going to wait until that reaction has happened before they go about their business again. That's where we jump in. All right? And jump out before they do it again. So this is I love this picture because this is a good way of describing what we do. Okay? This group of people, at just before this flying broken bat is flying at their heads, if we took this group of people and we took all of their thoughts, feelings, and emotions and we combined them into as many different combinations of thoughts, feelings, and emotions as we could, it would be a gigantic number. Now, at any other time in the markets, it's the same thing. You're trading against a lot of people who all have different thoughts, feelings, and emotions about the current price and where they think price is going to go or should go or whatever. It's a gigantic number that we are trying to figure out what's most, using we're trying to figure out exactly what's going to happen next over the next, period of time, whatever that period of time is. Now, trying to decipher that much data is way over my head. I tried and tried and tried and tried for so many years, and I'm just horrible at it. So I started thinking, well, how can I evaluate less data where I feel like I have a strong chance of being right. So you look at this picture, and just before this, there are probably millions of different combinations of thoughts, feelings, and emotions. And then right here, right there, right at that instant, you probably have 3 combinations of thoughts, feelings, and emotions. And they all have to do with protect from harm. Well, you know what? That's pretty much it. That's pretty much it. They all forgot about all of their thoughts, feelings, and emotions, and they're trying to protect themselves. Okay, now that's enough data. I got enough data right there to know exactly what happens next, and that's an edge. I know exactly, there's no film of this that I know of, but I know exactly what happened next. As soon as the danger had passed, and it's a small thing, right? It's a small, tiny thing that I know, but that's all I need to know. This small, tiny thing that I know is that they put their hands down after the danger had passed. They all did it. That's an edge. I know exactly what happened. Now, right after that, they probably all giggled, a nervous laugh that, oh my God, can you believe we almost got killed? Okay? But different thoughts, feelings, and emotions are starting to creep in. There's becoming more and more combinations of thoughts, feelings, and emotions to the point where 5 minutes from now, I don't know, somebody's getting a beer, somebody's yelling at the umpire, I don't know, somebody's out ordering a hot dog, somebody's, who knows? Who knows what this group of people are doing 5 minutes from now? Who knows what their thoughts, feelings, and emotions are going to be 5 minutes from now? But right now, I know. I know exactly what they are, and I know exactly what they're going to do next. That's our bunt trading edge. Okay, so this is how we do it. We've got a step-by-step process. The first thing we do is we want to find that momentum. We want to pick up when price is moving real hard, real fast in one direction, or mostly in one direction, over a course of several bars. Why? Because it's inevitable that price is going to rest, because traders are going to see opportunities at taking a profit, or they got stopped out. Either way, price is going to stop and change directions, at least for a little while. All right, so we do this this is our momentum indicator. This will color the bars to help you see when momentum is happening. You notice we go from a dark color to a lighter color. This light color tells us we've got really strong momentum, and there's not much chance it's going to go a lot further than this. All right? We have our velocity indicators. It's saying there's a lot of price changing going on inside of that bar. Very, very quickly, even to the point where you may not even be able to identify it or see it on a chart. So we have a lot of velocity going on. Again, that helps us to identify the potential for exhaustion. We've now got an OBOS, or an overbought, oversold. In this particular circumstance, oversold. We use a relative strength index, and we paint the outside of the bars a color to help us identify that we're in an oversold condition. You'll notice that we don't have any oscillators on the screen because they just take up space. All I want to do is I want to know yes or no. Is it oversold or is it not? If it is, it's going to show up right in front of me, right on the chart, right where my eyeballs are looking. We have some supporting information. We have our relative order flow, how fast the orders are coming in relative to previous bars. We have our pullback alert, which is suggesting that there's a lot of that at the beginning of this bar there was a lot of selling going on, and as we get further into the life of this bar, the buyers started taking control of this bar. That's our pullback alert. All right, so we're looking at a confluence of information, And then we factor in some defense, some support or resistance behind our trade. In case the trade goes against us, we're looking for strong lines of support or resistance to help us in the event that exhaustion wasn't complete yet. So that's step 4. Step 5, for this particular trade setup, we're looking for a divergence signal. And step 6 is we're looking for a trigger. All right, which would be on the prior bar. That's telling us we had a manipulation and we have divergence, and this works over and over and over again. There's no gray areas. Once you have all of your rules set, all you have to do is follow your rules, and that's your job as the lead trader of your company. Your job is just follow the rules, like waiting for a bus to show up. If it's not your bus, you don't get up. If it is your bus, you just get on it. That's it. So what do? We do one small thing. We become the best in the world at it, and we do it over and over and over again. This is what it looks like on a chart. This is what it looks like every day. I don't have any idea how old this video is. This is the one I show all the time because I don't feel like making another one. Because if I made another one, it would look just like this. All right. So these are basic trade setups that we see in the trade room every day. Okay. This is just like a picture I just showed you, right? We've got momentum. We've got an overbought or an oversold condition. We've got a couple of speed ticks suggesting that the orders that got filled could not possibly have been done by us slow retail traders with average internet speed and a laptop. All right, we have major support. We had at the open of this bar, we have 2 different divergent signals. That's here. This is our McDiver and our flash. People love these. At the open of this bar was the trade setup. This is where you put on the buy order, off it goes. You get your 5 ticks and you're done. You put the money in the bank and you sit and you wait for the next one. Drop, down it goes. This is a speed tick setup. We didn't have divergence on this one. This setup was something that we still trade very successfully, but it was a precursor to the speed flash, speed max setup. Just because this was working really well didn't mean that I didn't continue looking for other sources of data that the markets are giving us that might help us to identify a turning point. Okay, so this is a speed tick trade setup. Speed mac, speed tick, momentum, velocity. Notice the momentum bar is getting lighter in color. We have a pullback alert, and then at the open of this bar, we have the divergence signal. Bam, up it goes. Now, I could be cherry picking just a few, but you can come hang out in the trade room with us. You'll see this. Talk to some of our traders. You'll see this. Look on our YouTube at all the videos. You'll see this, and you'll see it over and over and over and over and over again. And ultimately it goes up. All right, so this is what we do. You will notice also when these indicators print. I didn't point that out. Watch this bar. There, boom. These indicators printed on the bar, right there. No repainting, right? They print in real time on the bar. Watch the open of the next bar. I'm trying to drag this slow so I can just stop it right there. Bam. On the open of the bar, that's where our decision making is. That's where this printed. So we have immediate, these are very powerful indicators that are very high performance type indicators. So what we're doing with these indicators, I've done everything I can to remove shades of gray, to remove information that can cause confusion, to make decision making very straightforward and easy. Okay. Oops, I didn't mean to go ahead. So if you look at the chart on the right, maybe that looks like something you use in your trading. And then you look at the chart on the left, they look very different. However, they're the exact same chart with the exact same information, but only printing the information needed to make a decision. Okay, the rest of the information is superfluous. It doesn't need to be there. It just causes confusion. It creates shades of gray in decision making. That was one of my weaknesses as a trader. So many shades of gray caused me to second guess myself and caused me a lot of confusion, anxiety, constantly second guessing myself. Did I do it right? So that's one of the first things that we had to do, was remove all of that information that we didn't need. So this was the birth of the speed tick. I noticed that the orders being processed, and not orders, but the actual buying and selling that had been processed through the exchange, were coming in at a certain rate that increased a chance of a pullback. So I started looking at, I actually created a histogram that was like a speedometer. And I started noticing that when the orders were being processed at a certain rate, right after that was when the price would stop and turn. So I started tracking these market manipulations. Divergence, I don't know how many of you know about divergence. It's an extremely underused tool in trading, which I'm very thankful for that, because that gives us, anytime something is underused, it gives us an advantage. And it's underused because it's difficult to read unless you work really, really hard at it. And divergence in and of itself is not really a good indicator to use by itself to try to trade with, because divergence can happen a lot in trading. For example, when we're in these phases of accumulation and distribution, we'll get a lot of divergence. That does not mean we want to trade it. That means price and momentum are drifting like a little creek or a little river. It really doesn't have much strength behind it. It's just kind of drifting in different directions. And because of that, price and momentum will just drift in different directions. You want something happening when it's running and pushing a little bit harder, but divergence is difficult to read for the most part. People tend to miss it or misinterpret it. But all we're looking for is for when price and momentum are no longer in agreement. When price may be setting a higher low and momentum is setting a lower low. All right? So instead of having these oscillators on the screen with all of these different lines and stuff, we just put an indicator right on the bar where divergence was detected. And that's all you need to know. You don't need a full oscillator with all of those lines causing you confusion and these shades of gray. We also do this with the MACD. We've got our Super D, which actually is the same algorithm, but using different momentum oscillators that we like to use. Our FT reset is our support and resistance, major lines of support and resistance, where we can actually put on the line our anticipation of the relative strength of that line as price approaches it, particularly if it approaches it at a relatively steep angle. Our overbought, oversold indicator. Excuse me. I love this thing. This is one of the most simple indicators. It's so clean and easy to use. All it's doing is alerting me right where my eyeballs are to the fact that price is overbought and oversold. Well, on this entire oscillator, taking up the entire bottom of this screen, all of this information to me is worthless It has no value to me until it crosses over this line. So instead of having to analyze this stupid oscillator and having it on my screen, I just said, you know what, this is all dumb. I need to just get rid of this and put the information I need that tells me when price is overbought and oversold, which is also one of the best indicators of exhaustion that there are. When price is overbought or oversold, it prints right on the bar. Now I know that exhaustion is likely to be setting in. All right, the way I use the volume spread analysis to help me identify when the orders inside of a bar start changing direction. The volume starts changing inside the bar. For example, at the beginning of a bar, there might be a whole bunch of selling going on, and suddenly price hits a value area where the buyers, all of a sudden, they all have resting orders sitting there. And all of the buyers now start firing off. Boom, 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 boom. And the sellers are still pushing. They're still trying. They start fighting it out. And the buyers, because they were sitting quietly waiting, are now overtaking the sellers. That's what's going on here. Okay? Helps us also to identify when price is likely to pull back and change directions. The ricochet is a byproduct of the speed tick. You know, I'm measuring the orders going through, and the speed tick says that when the orders reach a certain speed going through, think of that as a speedometer. When orders get to 100 miles an hour, that means it is very unlikely that retail traders are placing those orders. Okay, so that's the speed tick. The ricochet, when I was studying that oscillator, that histogram that I created to help me identify the rate of the orders going through, I did notice that maybe, you know, the speed didn't get up to 100 miles an hour, but maybe it went from 0 to 60 really fast. That also caused price to stop and turn sometimes. So that's what became our ricochet indicator. Right? And then we talked about the mho meter. The more momentum, the lighter the bar turns. Okay? It's all about confluence, though. This whole thing is about confluence. We don't just use volume spread analysis or order flow analysis or divergence or support and resistance or overbought, oversold or momentum or velocity or exhaust. We don't use that, just that. We wait until they all come together. Every one of those things are different sources of data, yet suggest the same thing is going to happen. Okay? So on this chart, we've got momentum. You know what that looks like now, right? That's the black bars going to gray, going to a lighter color, ultimately turning white. We get a white bar, we know price is about to turn right now. So we're looking at a strong push. We got an overbought condition. That's that pink outline. We've got our speed tick, meaning that the retail traders it's unlikely that the retail traders can trade that fast. Then we've got our relative volume or rate of orders going through. That's our ricochet. We've got our pullback alert, which is reading the orders going through the bar, changing directions, or a churning action. We're looking for a churning action inside the bar. The buyers and sellers, first there was a lot of buying, then the sellers kicked in, a lot of churning going on, and then ultimately, usually what happens is the sellers will take control. Okay? Then we've got the flash indicator there, which is divergence from the RSI momentum oscillator. We've got the McDiver there, which is divergence from the MACD. We've got the velocity indicator that says exhaustion is likely to be setting in, and then we've got our support and resistance, major and minor support and resistance. All right? We get all of that. Every one of us in the trade room starts to drool. Actually, to be honest, we've become kind of lackadaisical about it because it happens so often. You just sit there, you wait quietly, boom. Get on the bus when it shows up. All right, so we're going to invite you guys that have not had the opportunity to be in our trade room before. If you want to see it in action, honestly, we have better things for you to look at. We have a lot better information, a lot more efficient ways for you to learn about what we do. But I understand and I know that for some reason you think you're going to really learn better in a trade room. It's an extremely inefficient way to learn, but if you really have to do it, we're going to invite you to come hang out with us. Just send an email to Bunt there it is, kind of put it in. Just send an email to us asking for a trial in the trade room. You don't have to do it. You can ask tonight. You don't have to take the trial immediately. Just we'll hook you up whenever it's convenient for you. Okay. So you were, oh, I forgot. I had put that on there. Now, I mentioned this on Tuesday. It's kind of interesting. You see up there that we're a winner of the Star Awards from the TraderPlanet.com. We didn't even know. We were nominated, but then the Star Awards said, okay, you were nominated. Do you want to participate? And we're like, sure, we'll participate. And they go, okay, well, what we want you to do is we want you to mail out to your mailing list and tell everybody to vote for you. And I thought, no, wait a minute. That means you're trying to get all of the people who vote to join. You're going to start spamming them with stuff. And we thought, no, we're not going to do that. So we said, yeah, we want to be in your voting, but we're not going to tell our members to vote. And then we forgot about it. And like 2 months ago, we found out, wait, what? We won? So that's really kind of cool because it was just from the general trading public that chose us as one of the top trading rooms, and then the Bunt Trading as the top trading software. So we're pretty proud of that, and you're going to be hearing more about that. All right, so this is the same offer that we made to you guys that were here on Tuesday. We're going to continue this offer through Monday, and then it's gone. But we're going to offer you what we call our one and done investment. That's the VIP package. That's everything we've got, nothing else to buy, nothing else to buy in the future. Once you own it, that's it. So, for example, when I say there's nothing to buy in the future, if we create new indicators that we put in the trade room, you get them. You get them for free, forever. If we do have some new products that we've been working really hard on, that are specifically for NinjaTrader 8. We're real excited about them. All of our VIPs are going to get those for free too. We have lifetime in the trade room. Lifetime, okay. Unlimited trade room access is what we're supposed to call it now. We have a group mentoring session that we do every week. We have our Fast Forward program. I talked about that on Tuesday. This program is designed to shorten your learning curve. This isn't just watch a bunch of videos and now you know how to trade. This is watch some videos to teach you how to learn how to trade, okay? So these videos are how to use the tools that we provide you for practicing your trading, okay? And how often to do it and how to do it in a structured environment. So it's not a list of videos for you to watch. It's an actual structured program with tools to practice your trading whenever you can. You do not have to practice trading. In fact, we don't recommend that you practice trading during live trading hours. Practice is something that goes on after trading. Practice is not what you do during game time. Game time is for execution, right? That's exactly what we need to be doing for our practice. We need to be executing. For our game time, we're executing what we learned in practice. Right? There's a time for playing at things, for trying different things. That's not during trading. So our fast forward program is designed to help you with that and do it anytime you want. If you have a full-time job but you want to learn this trading thing, fast forward program is the way to do it. Once you get really good at bunt trading and you want to try to get a sponsored account or a funded trading account from Top Step Trader, we'll help you there. There is a fee involved, but we'll pay the fee for you to do a trial to get a funded account. Okay. We will have a personal VIP orientation. We'll walk you through the members area, what access you have, how to use the fast forward program, where to get to it. All of those things are involved. You also get priority support, and we'll even send somebody to remotely install things on your computer if you don't know how or don't feel comfortable doing it. So ordinarily, if you bought it off the website, you're looking at about $5,100, but we're going to do this for $4,250 for a single payment, or you can break it up into 6 payments of $820 a month. So we do have a coupon code there. Make sure that this coupon code will expire on Monday, so it will be gone. We don't usually do these payment things, but we had a couple of requests for it last week, so we went ahead and thought we'd throw it in there and see how it worked. All right, so if you're not quite ready to invest 100%, you want to ease into it a little bit, you can do that. It's a little bit more expensive to do it that way, but you can certainly do it that way. You will include these indicators, and I give you a month in our trade room, and do that for $850. It's usually $1,100. And there's the specials page. Can you guys put the specials page in there? Anybody? Anybody? Hello, is this thing on? Thank you. All right. I hope that was some good information for you guys. I hope it was enlightening. I know that we've had a lot of questions, and a lot of questions got asked and answered, but I'm here to answer questions for you if you have a few. Yeah, and I'm always looking for more, Dieter. I'm not one to set back on my laurels. I'm not looking for any ways to change what we do. I went through so many, when I was struggling, I went through so many trade rooms, so many products, so many different mentors or gurus or whatever that, I don't know, it seemed like once a month or every few weeks, they were changing completely. Everything they did was different. And I keep going, well, why are you doing this if what you were doing was so good? And so we don't do that. We do the same thing that we've been doing for years, and we just keep doing it. And we, like I said, we do something very small. We've become the best in the world at it, and we do it over and over and over again. How many ticks is the target profit for one trade, and what is the risk? We shoot for 5 ticks. 5 ticks. I want to get in and out as quickly as possible. As far as the risk, when I get into a trade, I always have a bracket order. So my target and my stop are entered at the same time as I place the trade. My target is set at +5. My stop is set at -7. Now, do I sit on my hands? Were you in the trade room today, Charlie? We had a Charlie in there. I don't know if it was today or yesterday. Charlie, are you here? Can you hear me? Oh, Charlie. Okay, so if that was you, Was that today? Did you watch me trade today, Charlie? Do you remember the outcome of two of my three trades? Yesterday. Oh, okay. Well, today was a good example of the of trying to measure the risk to reward ratio of what I do. I put on a target of five, plus five, and a stop of seven. But two of the three trades I took today, I managed those trades to break even because the conditions that got me into the trade changed, and they changed negatively. So according to my rules, I didn't do this because I felt like it. Because of my rules, I started shortening my stop because the conditions that got me into the trade changed. So two of the three trades I entered today, I got out of them at break even. So I didn't take a full stop just because I started with a -7 on my bracket order. It doesn't mean I ended that way. Now remember, I'm doing something very small. 5 ticks is very small. Any other questions? Did that answer your question for you? Well, that depends on your risk tolerance levels, Charlie. I am somewhat conservative, but not completely conservative. So I have tuned my rules to give me, on average, 3, 4 trades a session. Some people will tune their rules to take 6, 7, 10 trades on average per session. So it's really, first you got to learn the setups. You got to learn the rules. And then you get good at learning a very conservative set of rules. And then you can start to relax some of those rules. Kind of like driving a car. You know, when you first started driving a car, you were nervous and you had these very strict set of rules that you're going to follow. And eventually you get to a point where you're driving, you're like my wife, you drive with one foot hanging out the window. The other knee is on the steering wheel while you're using both hands to put on makeup and eat a sandwich. And you're probably safer driving that way than you were when you were first learning how to drive using some very strict rules. Okay? So the better you get at it, the longer you work at it, the harder you work at it, the more relaxed you'll become, the more trades you can take on average, if that's what you're looking for. See, I'm very comfortable because of my income doesn't vary a whole lot from month to month. I don't have any really great days where I kill it. I don't have any real bad days where I get killed. So it's very, I have a very regular income. Um, and I like to trade 3 or 4 times a session. That's comfortable for me. I will trade 10 times if there are 10 setups that day, but generally my rules are tuned for 3 to 4 trades per session. And now if I take 3 losses, net 3 losses, I stop trading live and I trade sim for the rest of the session. Same if I take 3 wins. I stop trading live and I trade sim for the rest of the session. That's part of my rules. Any other questions? Nothing? Well, I hope you guys all found this very interesting. Thank you for coming. We're open to any kind of questions. Send us emails at bunt@theintentionaltrader.com, and we'll be happy to help you any way we can. come hang out with us in the trade room, or let's just go ahead and get started. You can jump in, be a VIP, and we'll get you going. All right, everybody. Thanks for coming. We appreciate it.